The stock market's been going gangbusters for months. That sparked concerns. Is it a bubble?
Worried that we're in a bubble?
Our general view is the Nasdaq's in a bubble.
Whether the Fed is inducing a bubble.
Bubble.
Endless chatter about how the stock market's in a bubble.
Stocks recently hit record highs, despite a slowing economic recovery and amid some of the worst months of the coronavirus pandemic.
You have the stock market going to all-time highs almost on the daily, and yet we look over to the economy and we see a lot of hurt. We see millions of people without jobs. Small businesses are really suffering, and that can be confusing for investors and non-investors alike.
If the stock market is a bubble, that means stocks are overvalued, and prices could plummet if the bubble pops.
The S&P 500 lost around half its value when the housing bubble popped in 2008 and when the dot-com bubble burst in 2000. But it's pretty much impossible to know if that's about to happen again, and you could miss out on big gains if you're wrong.
So we know a lot of people during the crash of 2008 really actually put a lot of money off the table, and they were looking for opportunities to invest, right? And it just kept on going higher. So they wait. Well, okay, now it's 5 years, now it's 6 years. All of a sudden, you're looking at over 10 years that the markets continue to go up.
And they, destroyed their entire portfolio because they missed out on the biggest bull market in history.
That's why financial advisors say, if you have money to invest, don't wait. Here's how to do it wisely.
After the break, the Dow hitting a record high today.
The Nasdaq closing at a record high, up almost a full percent.
Record high S&P, record high Nasdaq.
The S&P 500 hitting a record high, and yesterday's trade today will put a star up there, up 14% during that time frame.
There has to be an end to the party. Someone's gonna turn on the lights and say, go home. It's 4 a.m. Caveating this with I'm just a guy in the bleachers watching this from afar. I'm not an economist.
That's my colleague Gabriel, who's waiting on the sidelines for the right moment to buy into the stock market, now that he's saved up enough money. He's not an expert on the stock market, just a beginning investor aiming to buy low and one day sell high. And he's been waiting for a while.
So I have been expecting this recession since about 2017, and back then I was ready to go in with a small amount of money.
Do you regret not getting in when the stock market crashed back in March?
I don't, because I think that was a mini crash. I don't think it was a real crash. Eventually I have to get in some form or fashion in 2021, I have to. If a significant portion of the population has gotten the vaccine by the end of the second quarter, and by the end of 2021, most of the population is vaccinated, and this is in the rearview mirror, I could be left holding the bag of my money, still waiting for a downturn that is never going to happen.
Gabriel's fears about a pullback aren't completely off base. There are concerns that Wall Street is out of step with Main Street.
The stock market tanked in March 2020 as the coronavirus pandemic shut down the US economy. The Dow fell 37% from its high in February. The S&P 500 fell nearly 34%. But by November, both the Dow and the S&P 500 were at higher levels than they were pre-pandemic. Despite this,
more than 160,000 small businesses have closed since the pandemic struck. That's according to Yelp. Think of that.
Rise in what's called permanent layoffs. The idea that these folks do not believe they're coming right back to, we're at 3.7 million.
There are a lot of reasons the stock market is going gangbusters despite the state of the economy. With promising developments on the vaccine front, investors are anticipating a return to normalcy.
Since the start of the pandemic, the Federal Reserve has injected trillions of dollars in stimulus into the economy and slashed interest rates to zero.
And this actually creates a pretty fertile ground for stocks to continue to grow. Companies like this, balance sheets like this environment. But the question is, how long can we continue to do this before it creates, whether that's a bubble? And the answer is no one really has a good idea.
Stock market pullbacks of 10 to 20% happen every year or two, but bubbles bursting are a lot less common and almost impossible to predict.
Experts caution, someone like Gabriel could miss out on big gains if he sits around waiting for something that doesn't end up happening.
Should I just bite the bullet and get in? Am I being stupidly stubborn by waiting?
So we know a lot of people during the crash of 2008 really actually put a lot of money off the table, and they were looking for opportunities to invest, right? And it just kept on going higher. And a lot of investors were saying, well, it's going to come down at some point. So they wait. Well, now it's 5 years, now it's 6 years. All of a sudden, you're looking at over 10 years that the markets continue to go up. We know long term, the market will do very well here in the United States.
Instead of timing the market, experts say to invest a consistent amount each month, no matter what the market is doing. But keep some money on the side to invest when the pullbacks happen. That's, of course, if you've already ticked off other financial milestones like paying off debt or building an emergency savings.
You flip a coin, 50% chance the market corrects or pulls back in the next day, week, month, 50% chance it doesn't. We come to accept the fact that what we call market timing is pretty futile. We can't do this well. So there are strategies that we can put in place to help deal with this fact that, your magic 8 ball is as good as mine here. And we use something called dollar cost averaging.
One example of dollar cost averaging is when you automatically allocate a percentage of every paycheck to your 401k. Instead of investing all your money into the stock market at once, chop it up into equal smaller contributions that you invest incrementally, for instance, every month.
So if the market is going up, okay, you're buying more and more and more expensive. That's the price you pay for the opposite, which is buying cheaper and cheaper and cheaper. So that's how we hedge this notion that we cannot time the market.
Then what you want to do is also keep some money where you can be very strategic. And that's when you see a dramatic drop in the market. Take a percentage of your savings and invest during that point. I just wouldn't go too aggressive and do individual stock picking right now. That increases your risk and also increases your cost.
Am I wrong to think that a downturn is coming? I have been waiting for a downturn for years now.
I think we'll still see some intermittent corrections, but probably not to the depth that we saw earlier this spring. So the key thing is to make sure that you're well diversified, that you don't get over excited and start investing a whole bunch right now. I don't think that's a great idea.
Where would you advise young clients to park their money during a time like this?
For most investors, using low-cost index funds that give you exposure, to the broader markets, whether that's large U.S. companies in the S&P 500 or your mid-caps and your small caps, or even going international.
The current bull market could get derailed for any number of reasons. For instance, let's say, if something goes wrong with vaccine efforts and economic recovery is further delayed. But to weather the volatility, it's important to stay consistent and diversified, and be ready for major opportunities in the market if and when they come.